Good morning or afternoon or evening, wherever you're at in the world. I am Mike, aka Veteran Crypto, and this is The Node, your place for news, interviews, and education on crypto, DeFi, and TradFi. So, without further ado, while we're waiting on David, I will jump into the socials and let you know where to find us. So, if you want to join the conversation, you can jump on over here to the Node Net, and you can find us at the Node Network, all one word. And we'd like to thank everyone that tunes into the show and that like and subscribes and shares the stream. You've helped us grow. A lot of channels out there are shrinking, where we are growing, and that is due in no small part to all of you out there. So thank you very much. So if you want to check out all of our different channels on our network, you can see we have a bunch of different topics. So I just got done on Saturday doing an interview with an old friend of mine, Mike Ox, who has a shooting system. If you're into shooting, and using for this one, it was red dots on pistols and the transition from iron sights to red dots. So really, really informative. Something that you might want to check out if you're thinking of making that transition. But we have this show, The Node, Monday through Friday, 9 a.m. to 11 a.m. Pacific Standard Time. And this is where we talk about DeFi, crypto, and TradFi, just investing in general. Crypto and Chill, Tuesdays and Fridays with myself and Jeff, where usually we just hang out, kind of laugh and joke, and just talk about, very generally, what's been going on in crypto since the last show. The Blockchain Report, Monday, Wednesday, and Thursday, immediately after this show. And this is where Jeff does deep dives into very early projects. And this is really interesting because he is going to start adding the deep dive format that we do on this show to that show. And we're going to be posting both of them, from the deep dives from both shows to our library on our official website, so that all of you out there can go in there at any time and reference those. So the videos, the slide presentations, the literature, everything, so that you can get a better understanding of the tokenomics of these assets, of the underlying services or protocol that they are offering, so that you are better educated on these tokens and the value capture, which is a key aspect that so many people, and influencers, educators, and investors alike, don't fully grasp. I see it every day on social media, where people talk about some of these projects that have the tokens have no real value capture. And what that means is there is no connection between the token and the success of the underlying protocol. Let me add David here. There he goes. There's no connection between the token and the underlying protocol or chain. No matter what it's doing, if it's tokenizing, it doesn't matter if it tokenizes trillions of dollars of real world assets. If there is no connection between the token and the underlying chain, there is no value to the token other than pure speculation. And at some point, if people understand that, and there's a huge sell-off, if you aren't the first one out, you are going to be exit liquid. So that being said,
don't want to get stuck holding the bag, especially when that bag smells like doo-doo.
Yes, when you realize that bag is full of doo-doo, you don't want to be left, and you don't want it to be on fire. Nope. So Sovereign Soil is my show that I started at the behest of David and some others, sharing my knowledge from my decades of military service, my couple of decades of emergency preparedness, education and knowledge, and my over a decade as a homestead, on my homestead and in my cabin. So I just started sharing what I know. I don't know everything, but I'm sharing what I know on the Sovereign Soil channel. That's where, like I said, did that interview with my old buddy on transitioning, on a pistol from iron sights to red dot. and to how to find the red dot faster. So on your draw, whenever you're presenting, being able to just naturally, even with your eyes closed, be able to draw, place where you think it is on the target, open your eyes, and that red dot should be right where you thought it should be. So it's just that instinctual being able to get that that sights on the target consistently, just naturally. So that was a good one. And this one has performed really well, like almost 1,000 views on this one where I was just talking about the three firearms that I think are very important for everyone to own, which is basically a pistol, a shotgun, and a semi-automatic rifle. I mean, it's really that simple. It covers all your bases. But I go in depth into kind of which ones I have and why. But yeah, it's performed really well. The market wrap daily. David does at the end of the day does a market wrap, so about 15 to 20 minutes, a little bit more sometimes, of charts and just what's moving the markets, why they're moving, which assets moved, and that sort of thing, and kind of what he sees potentially in the future. And then on Tuesdays and Thursdays, he does a deep dive with one of our community members, Ellie, where he's walking her through his coaching course and sharing that. So a lot of great content there. Saturday Night Fever. So Jeff has been doing a really great job finding other DJs in the Bay Area, there in San Francisco, and doing a bunch of interviews. And along with those interviews, sometimes they do guest sets. You can see here where they'll do a set, spinning their music. So a lot of really, really cool. If you're into that style of music, they do tutorials, a lot of really cool stuff. And then Thursday evenings is when we just kind of get together. Sometimes it's the three of us. Sometimes we have guests on, depending on the topic. And we just talk about hot topics, ancient civilizations, religion, politics, legalization of different drugs for therapeutic reasons, whatever. And then gaming and chill. So we're going to be revamping that a little bit. Ellie and Jay, the hosts of that, each of them have, they just kind of have some stuff going on in life. And so they're not able to host that anymore. So probably me and David, and maybe occasionally if somebody from the community, if Jay and Ellie want to jump on when they have time, or Black Ice, at times I've seen where he wants to jump on. If you want to jump on, maybe we'll just make it a random community member that jumps on with us, and we'll just kind of laugh and joke, drink beers, whatever, and play different games. We want to start mixing it up a little bit. So me and David are looking at Sniper Elite right now, and a World of Tanks Heat, which is a new modern revamp of World of Tanks, which is an awesome game in and of itself. So super, super cool. I just, yeah, I love those those tank games and stuff like that. And then
yeah, man, I mean, the more the merrier when it comes to the gaming and chill thing. I'd love to have a bunch of people on from the community, and Ellie and Jay, if they want to come on anytime, of course. And I think it'll still be a lot of fun.
Yeah, no, Ellie's saying she still love to jump on at times. So that's cool. So and then last but not least, the Node 24/7. So David has started generating some music, just kind of deep ambient techno that I've actually really started enjoying playing in the background while I'm getting work done on the channel and stuff like that. So it looks like it's really people are really starting to enjoy that, getting some really good views on that. So if you want to check that out, greatly appreciate it. If you could throw up a like if you like the music, make a comment on maybe some other styles of music that you might be interested in, and maybe we'll mix it up a little bit.
Yeah, we got a new one dropping today. I'm going to be finishing it, after our show here.
Oh, perfect. And then on X, if you want to follow us there, it is at the Node_network. So I had to add an underscore in there. And our official website, which is coming along beautifully. David has done a great job in designing this. And so, and I love how he put the Intel library like front and center here, because that's going to be so valuable to all of you out there. but super simple and straightforward. If just start for free. I use the F word. But
That's fine.
yeah,
Oh,
no, it's
dude, look, Bitcoin is dumping
like perfect.
off
I
about
sure.
about 1,000 points, or a little bit less than that, maybe 600 points in the last looks like 5 minutes. So
Oh, dude,
things accelerating.
maybe I made like 10 or 20 bucks on my short. I got like $100 2x in just to do something, just to scratch that itch to do
So
something.
basically, Mike, since we started the call in the last 10 minutes, Bitcoin is down, I want to say just a couple hundred points, but it's accelerating to the downside, though. There's, the speed of this move is pretty exciting. And basically, all I'm thinking about here is, later on today during the regular session, when do I start, buying? So I'm just going to be, trading futures with like a little bit of leverage. And if we get like a real flush, which it looks like we're getting right now, you see these flushes, Mike. Can I share my screen real quick because these don't really come around all that
Yeah,
often.
how about
Um,
it?
so
I'll
here,
get to
check
the
this
site.
out. This is interesting. So when you're watching Bitcoin sell off, or ETH does this too. Solana does it also. The other alts I don't really trade that much because they're just a little bit too volatile, a little bit too manipulated, too much VC money. I'm talking about SUI in particular. But when you start to see, this is a 5 minute chart here. So and here, let me bring this up to the stage there. Um,
There you go.
Awesome. So this is a 5 minute chart. Now I want to just zoom in here to the last 10 minutes. And this level of what was support just broke. And now that we're getting this real breakdown, I've got the next level of support drawn in here, 7,500. So if we get a push down to 7,500, I'm going to
You
be
mean you mean
buying.
60? You mean 65?
Oh, well, no, 70,000.
Oh,
70,000.
70. Okay, you said 75. So
Oh, okay. So yeah, I misspoke then. So it's
okay,
70,500. So if
okay,
we
I see.
get if we get so what I'm trying to describe is a flush. So when you see on a 5 minute candle a big move and then a big wick. So the big move has to be, a couple thousand points on Bitcoin, maybe 1,000, 1,500 points. And so in a 5 minute candle, for there to be a 1,000 point move, that's a 1.3% move. If it's a 2,000 point move, then
Mhm.
that's 3% in a 5 minute candle. If you get a big move like that, it's called a flush. So if you get a big flush like that, you want to buy it. And same thing on the pump. If you get a big pump like that, you probably want to sell it. Although crypto, when it's really pumping, it probably wouldn't want to sell pumps like that. But the dumps, though, I definitely want to buy them because they get bought. So this dump, it's just 10 minutes. And you see how we're getting a little bit of a pop here. So 70,680 looks like the low for this last 5 minute candle, which closes in a minute. So I'm just thinking to myself that this might not be done yet because the support is, another 300 points lower. So if we get a test of that level of support, let me just zoom out here to an hourly so that we can see that. So that level of support is like right around here, 70,500, 70,600, something like that. I'll just move this up a little bit just to cut those off. So pretty close, and it's getting bought. So maybe we won't get another move down. But yeah, so this is a level where if you're short, I might think about buying some futures here. So that's what I'm thinking about anyway. Now it's early in the day. We could see more downside out of Bitcoin, especially now that it's broken this important level of trend line support here. So
Well, I'm up 16% on my short. I made 15 bucks. Should I close it out? Take profits?
no, what's the funding? What's funding?
I actually on GMX. I was meaning to ask you, where do you find that?
Okay, so on GMX, if I'm over here on GMX and I'm looking at the net rate, you've got to make
Okay,
sure that you're looking in the right pool. So if I've got a position in the BTC USDC pool, then I've got to
that's where
pop into. Yeah, then I've got to pop into that pool. And then when I hover my cursor over net rate, I'll be able to see the rate. So I'm actually getting paid 17% to be short Bitcoin right now because the open interest over here is mostly long. So if most people are
Yeah,
actually,
so I'm making like 17.02 per year.
yeah. So you're
Okay.
making 17,
And
17%. But that's it basically is every 8 hours. The
it
funding
pays out
updates.
every 8 hours.
And it changes too.
Oh
So
yeah, yeah. I know that's what you were saying.
yeah, so every 8 hours it changes and it pays. And so
Well, and it says short positions receive a funding fee, per hour, of X amount per hour, and do not pay a borrow fee.
right, yeah.
Nice.
So if you're earning funding, then yes. So that would be true if a long position was earning funding also. Um, so yeah, I'm watching these markets, and this Nasdaq, man, is just very resilient. Bitcoin just broke support just in the last 10 minutes. Hyperliquid hitting resistance up here at 75. If I'm telling you though, Mike, if Hyperliquid breaks out above 75, which we're going to find out today when we go through the deep dive research, but I think that that's becoming increasingly, potentially likely that it could
Oh,
break.
it's like I need that to pull back so I can freaking get some exposure to it, but I am
Well,
not
so
buy at these
just
levels.
think you got to change the way you think about it, because if Hyperliquid's at 70, let's say, all right, and then we hop on over here to Coin Market Cap and we take a look at this. Hype is a better protocol than fucking XRP. Okay, XRP 80
Oh no,
billion
I mean,
market cap.
I
Well,
get that. It's just I just don't want to buy into this
no,
epic
no, no.
freaking.
But hear me out. Hear me out for a second. Maybe, maybe, and we're going to find out today when we run through the deep dive on the tokenomics of hype, and where the demand is coming from, where the supply is coming from. We're going to learn a lot more today. But just think about this: hype at number 9. Okay, 17. Let's call it 18 billion market cap at $70. What if hype triples from here? Because that flywheel, that demand just outpaces supply, and so number go up on the token. What if and it seems like that could be, especially on a breakout above $75. We get a breakout above 75, bro, and $100 comes next. And once you hit 100, then it feeds on itself. So then you could do 2, 3, 500. So, you could see this 18 or $20 billion market cap go to 60 or 80 billion real quick. That's a 4x. So you could see, Hyperliquid up there at 350, like fast, like within literally just a couple of weeks. And then it would overtake XRP and could even overtake BNB. BNB's like Binance chain, man. We need to do some deep dive research on Binance chain, the BNB layer one.
I know that you were wanting to do that one,
Yeah, because I want to compare these,
but we
right?
wanted to get the stables and do hype
Yeah,
today.
so I've got that research queued up here, but so
Yeah,
just it's,
we'll do B&B tomorrow and maybe like one other.
so all I'm saying is, what if hype goes from 70 to 350, and all of a sudden its market cap is up there with BNB and XRP. So, but if that's a potential outcome, right? Let's just say,
Yeah.
well, then how do you define your risk? So if you take, and how do you make it worthwhile to take that risk? Because let's say that you got $3,000 in cash on hand, just as an
Yeah.
example, right? And so if you want to buy hype at 70, then you can buy, 40 tokens, 45 hype. So
Mm.
let's just call it 50 to keep it easy. So you got a position of 50 hype, $3,000, just to keep the math easy. Okay, so how much risk do you want to take? If hype goes from 70 to 63, now you're down 10%. That's $300. So how much do you want to risk? How do you define that risk? And then where do you decide, hey, I'm going to start taking profits on this? So if you're going to put up $3,000 in liquidity and collateral to be able to trade, and you're not going to use any leverage at all, no leverage, well, then a 10% pullback in hype and you lose $300. A 25% pullback in hype and you lose like $750. So how much are you willing to risk to find out if you're right on direction? And then the entry has to be above the breakout, which I think is like $75. So that's just the way that I would be thinking about it.
I'm okay with missing out. I'm waiting for a pullback. I'm not going to buy in unless there's a pullback.
Well, you might be stuck watching it just moon because
And you know what? That's okay. It's like
that is okay.
You
That
can't
is
catch up.
okay. Yeah, and you got to be okay with doing that.
Yeah,
It's just that, when it comes to large caps, putting in moves like this, it doesn't happen
yeah.
very often. So I want to see if I can catch it and ride the thing, if it's going to moon and go from 70 to 100 or 200 or 300 or maybe a
Oh, and
500.
you're right. I mean, it very well
Yeah.
could do. We've seen it happen before. With other. I mean, it happened with B&B. It's just
Yeah, it did happen with B&B. So, just a thought. But
yeah. No, you're absolutely right. I just can't allow myself to that emotional jump in because it's mooning.
well,
Um,
no, but the way that I just broke it down isn't emotional at all. I'm saying, okay, I've got this amount of capital. I think that there's a possibility that if B&B breaks above 75, because that would be the trigger for a go no go. If
I
it
just
breaks
I just
above,
I just feel like it's a lot more likely for it to at least pull back temporarily before it goes higher. So that's what I'm banking on, and I could be
well,
totally.
we're gonna find out later today when we run through the research.
Oh, absolutely, absolutely. So really quick, if you want to start your DeFi and crypto education, there is no costs, no gimmicks, no tricks. Don't have to give a credit card, nothing like that. Just come in here, sign up, and start learning. It's really that easy. For a education system that most people charge thousands or tens of thousands for, we give away. We just want to educate you here. We are not influencers here. We are educators, and we're learning all the time too because this ecosystem is constantly changing. So come learn with us. There's no cost, no gimmicks. Jump in. The Intel library. This I am so excited for. So this is all of the deep dives that we do here on the node, and Jeff is starting to add his as well. So you can see we've added, Athena's USDTB. We did Avantis on Thursday and Plasma on Thursday, and then today we're going to be adding the stablecoin one and the hype one. And later today, as soon as David, he's gonna give me like a kind of a checklist of how he puts these together. I'm gonna start just going through and do as many of these as I can a day on all the top projects. Like Canton and all the ones that we're always talking about, and then just start moving down the list, and just so that every single project that's out there that's worth taking a look at, or that's out there being shilled and hyped, so that you can look at it and decide for yourself, is this something that I want to invest in, or is it pure hype? Is the price and the price movement nothing but people out there talking about it so much that people are FOMOing in? And that's important to know. And it's okay. You can trade short term, that mind share, that hype, that good news on these projects. You just got to be able to know when to get in and when to get out. Some of these you don't want to be in long term, but that's up for you to decide.
You got to define your risk. You got to know how much risk you're willing to take, because a lot of people will just see, a token number go up and be like, "Oh my God, I got to buy it." And then they buy it and then it crashes or like it pulls back 25%.
Yeah,
And they don't know what to do. And then they get stuck in the trade because they didn't have a plan going in and it was just an emotional purchase. And now you're stuck and you don't want to exit because that means realizing a loss. But that's exactly what maybe you should do. So yeah, you got to have a plan going in.
No, absolutely. So we're still dialing this in. The emailed version it still has some bugs. Last me and David talked, but on the website here, it seems to work just fine. So this is our AI generated newsletter, and it has a ton of really good info. And the great thing about it is you can select the assets that are in your portfolio or that you're interested in, not the ones handpicked by us. So I selected Bitcoin, ETH, and Sol. And you can do crypto, you can do commodities, you can do stocks, whatever, as long as it has a ticker. And you just put in your email and just get a preview. And it will generate that just that quick, and it will give you the ETF, inflows and outflows. It will give you the trading ranges. It will give you the liquidity pool ranges, the on-chain analytics, the flows, the liquidity flows, the derivatives, the catalysts, the big stories. It will give you all of this, and even the paid version is only $20 a month. So I mean that's like 66 cents a day. And I know that an hour, hour and a half, the manual one that I used to put together, it took me like an hour, hour and a half to put it together. And that was just for, 4 or 5 assets. So, I mean, is your time worth more than 66 cents an hour? I would dare say yes. And then it has also, if you keep scrolling down, like right here, it's showing the, over time, the inflows and outflows as well on the graphs. But the cool thing is that it will give you the top stories with links to the sources, the cited sources. So like Reuters, FinHub macro calendar. You have New Zealand's lower trading volumes during recognized holidays. So I guess in New Zealand there's a holiday today. So there may be whenever there's low volume, it's a lot easier to manipulate markets. So it's just saying that it could exacerbate volatility in liquid assets like Solana. If large orders materialize, that's why on the weekends, often you see a lot of big moves is because of low volume. But you can get this one. It looks like the big story is crypto ETFs face historic liquidity crisis as institutional outflows accelerate. So it looks like there's a good amount of liquidity that keeps exiting these ETFs. So it's obviously something to take note of. And we're seeing, Bitcoin is dipping lower. So it's an indicator of potentially more downside. The quick hits. Dell challenges Apple with a new XPS 13 laptop. Nvidia, like I said, we do traditional finance as well, stocks. Bitcoin ETFs extend historic 14-day outflow streak. ETH spot ETF face sustained sell pressure. So just a lot of really, really cool info here. And then our take. So basically just kind of overall what's going on and what we see presently, and then what we see on the 12-hour, 24-hour, and 72-hour watch of what potentially is going to be going on. So a lot of really, really good info in the newsletter. Oh, hold on. Let me add David to this one. Go back to here so that we can show you. There we go. Man, there we go. Community. If you want to join the no-cost Discord, you can join it here. If you want to join the premium calls, so for $99 a month, you can, and there is a 7-day free trial or no-cost trial, excuse me, where you can do a week's worth. So 3 separate days of these live calls, where it's a video call with David and the students in his advanced DeFi university that are successful DeFi traders, successful traders, and they give lessons, and then people in the community, they can also share opportunities that they find for interest rate arbitrage, looping, all those sorts of things, and and then potentially things that they're avoiding. Maybe they did something and made a mistake and lost money, and so they share their wins, they share their losses, and as a group, they all get smarter, they all get better. It's also a great place to find mentors. Find somebody that matches your risk profile, somebody that is interested in the same types of assets that you are, or maybe the same advanced strategies, somebody that's successfully been doing it, and that is a person that you'd want to align yourself and and see if they'd be willing to mentor you. So community is great. If you find a good solid community, just with anything though, never give anybody access to your wallet or your assets.
No, don't do that.
Yeah, that's never a good idea. Program.
And no one in the community is going to ask you, for something crazy
No.
like that. But if anyone ever does, tell me, like immediately tell
Yeah.
me,
Yeah. Tell David, tell me, tell Jeff, any of our moderators in Discord. We're great at cleaning. I cleaned out somebody this morning that was, shilling something in there. So yeah, just let us know. We'll definitely get rid of them. But our calendar. So, this is our weekly calendar of all of our shows, live shows and recorded shows. You can see, today we got the node. Immediately after this, we'll have the blockchain report. We'll have the daily market wrap, with David. And later on this afternoon, myself and David will be on the live call that I was just talking about. Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. We have shows every day of the week with all those different topics that we talked about. And then we have the store. So if you want to help support the channel and buy a T-shirt, buy a hat, hoodie, beanie, whatever it is, we greatly appreciate the support. We're definitely we're a business. I do this full time. David does this full time. So it's definitely something we're trying to build into a profitable business. So if you're so inclined, we greatly appreciate it. Not necessary if you either can't afford or not interested in that. If you could please again just subscribe, like, and share the stream and help us grow the channel. That helps more than anything. So please, by all means. And then there's the coaching tab under more. And again, this is David's very intensive that he's showing on the Tuesday and Thursday call with Ellie is a 6 to 8 week basically one-on-one mentorship where he accelerates you up to where you can competently and confidently navigate the different types of wallets and protocols to do all the stuff that we teach in DeFi University. The arbitrage and the looping and all those different things. So if you are curious about if you're crypto curious and you want to try and see if this is right for you, come down here and schedule a discovery call. No cost, no obligation discovery call with David, and he'll go over your portfolio, your risk tolerance, all those different things, and where you're at in your education. And if you're ready, then potentially have you sign up. If not, maybe he'll point you in the direction of the no cost DeFi University, point out a couple of the modules that he thinks that you could benefit from. And once you're done with those, then revisit maybe taking the coaching, because we want to make sure that you get the max value out of any of our paid services. So we don't just want you to pay so that we get your money. We want you to be able to extract the max benefit from these programs and services that we offer. So, all right. Well, let's jump into the news before we get into the deep dives. And on that note, let's see what we got as far as. All right. So, Bitcoin is facing a heavy structural test as investors de-risk ahead of summer. Spot Bitcoin ETFs recorded massive weekly outflows totaling 1.67 billion, driven by geopolitical tension in the Middle East. I'm sure that you all heard that Iran is backed out of the talks and oil's is pumping, and a broader macro shift toward AI and semiconductor stock listings, such as the impending SpaceX IPO, absorbing market liquidity. However, institutional capital isn't exiting crypto entirely. Instead, a noticeable rotation into high-performing alts is underway. I don't know why, but it looks like XRP ETFs have some inflows. Hyperliquid, that one we're going to be talking about doing a deep dive today. I understand that one. It saw almost 11 million of inflows, making it in its 11th consecutive day of positive inflows. Near Protocol captured about 7.6 million. We did a deep dive on that the other day. So there's some good projects out there that are pulling in and have positive flows on their ETFs. I've actually heard that should be getting an ETF here soon, and so I'll be interested to see how that performs.
Yeah, I mean, look, I'm watching hype here, Mike, and hype is just a beast. It
Yeah,
is a
it just keeps
beast.
going.
Yeah, I mean, look, well, it just held support at I think that level of support came in at $70.50, and
Mhm.
just held support, man. A break above 72.62, $72.62 for hype, and send it back up to the all-time highs at 75, man. So this thing, no signs of slowing down here.
Yeah, yeah. All right.
Yeah.
So let's do institutional prediction markets hit 60 billion as Wintermute enters the arena. Prediction markets have officially transitioned from a retail crypto trend into a massive financial primitive. Total trading volume for the sector has crossed 60 billion year to date. In a monumental liquidity boost, major crypto market maker Wintermute announced it is now officially providing institutional liquidity across both Polymarket and Kalshi, which together handle over 5.8 billion in weekly notional volume. So, I mean, what are you seeing as far as institutions in these prediction markets, David?
Well, they have an edge. They have a real edge because they've got the smartest people in the world working for them. They've got all the money in the world. They've got access to the fastest hardware, the fastest connections, and they're able to provide liquidity on both sides of a market. Across probably almost every market on Kalshi and Polymarket. I'm not quite sure about Kalshi how that works, but definitely on Polymarket I am. And I mean, look, all those bot images that we used to see on X of, oh, traders doing 10 million% every day on Polymarket. Remember seeing that stuff?
Yeah, yeah.
I think a lot of it was probably fake, but some of it was verifiable on chain. I think that just became much, much more difficult because if you are retail and you've got access to AI, so you can build software and you can build a piece of software to trade in an automated fashion on Polymarket, well, now you're trading against Wintermute too. So, like, good luck.
Yeah.
It's gonna be more difficult now. But yeah, I mean, you can still do really, really well. There are opportunities. I would maybe look at like sports betting, something like that. Um,
Mm.
because the opportunities around the 15-minute arbitrage stuff might be a little bit more challenging now that Wintermute is in the game. Yeah, those guys are smart, man. And this is also the reason why a concentrated liquidity provision in any V3 format where
Mm.
you don't have like specific rules for the pool like you can set up in V4. This is the exact reason why you don't see big institutional liquidity providers. You
Mm.
typically don't, unless they want to provide liquidity in their own tokens or products. And the reason why you don't see that is because there's no structural edge. You see, these Wintermute guys, they can get a structural edge when they're trading against retail on Polymarket. That's an edge. They can build an edge into that. But if you're providing, concentrated liquidity or full range liquidity, there's no edge. In fact,
Mm.
you're structurally likely to be unprofitable. So, like, yeah, just think about this. If V3 liquidity provision was this money printer, and I know that a lot of our competitors say that it is still, guys that I trained
Yeah.
still go out there on YouTube and say that
Oh,
it is.
I see the
Where
thumbnails. How
where
you
you
make $10,000 a month, using liquidity pools.
it's a lie, man. It's just a straight out lie, and dude knows it. He fucking knows it. And so, like, here's the problem: if you're providing liquidity, you've got this thing called impermanent loss. So that's your cost of volatility. It's called gamma. Okay, IL is your gamma because
Mm.
liquidity provision, that is a derivative. It's similar to an option. So when you provide liquidity, your cost is gamma. That's your cost of volatility. Now, what do you get compensated for? What do you get compensated in order to take on that risk, take on that
Fees.
gamma risk? You get compensated with fees. And those fees, that's your theta. And so if you want to figure out, are you profitable as an LP, just find out, was your impermanent loss greater than the fees you collected or not? And if the answer is no, then you weren't profitable. If the answer is yes, then you were profitable. Now, the
Mhm.
problem here is that there's no structural edge. In fact, you're likely to have your gamma be much, much greater than your theta, like over a long period of time. That means you're likely to lose money over a long period of time. And what that means is anyone who doesn't understand impermanent loss, when they show you, hey, I've got all these fees, this is like passive income. It is not. It is not passive income because you
Well,
take a ton
because
of risk.
the value of of the two assets that you have to provide for the pool, as they diverge, you're losing money. So
And
I mean,
you can lose a hell of a lot more than what you earn in fees.
exactly.
So
So I mean,
and
you have to have highly correlated pairs, or
right,
be earning a shit ton of fees
right,
to truly be profitable.
right, exactly right. Yep. So
On that note, we're going to be talking about stables today, and so if you had two very two quality stables, I mean, would that be seen as they're both pegged, potentially if they're good, good solid stables, and there's a decent interest rate, like say you can find some plays to where you can loop or something like that, make like 7, 8, 10%. Would that be a smart way to use liquidity pools? Or
oh yeah, oh definitely.
okay.
You just need to basically you need to make sure that the volumes are going to be consistent and what are those stable coins pegged to. So if they're pegged to, let's say the dollar, okay, great,
Mm,
awesome.
yeah.
But if they're not pegged to the dollar and
If they're pegged to
they're
Australian AI companies.
right, so I would just be careful because if you're providing liquidity in two stables and one is pegged to the euro, the other's pegged to the dollar, then that's more like you're a forex trade. There's a lot of impermanent loss there. So just make sure that both of the stable coins are pegged to the same thing. Okay. And
Yeah.
since we denominate everything in dollars, make sure that they're US dollar denominated stable coins.
Or quality Bitcoin. I mean, Bitcoin and wrap Bitcoin and things like that. I mean, there's still risks involved, but they would be highly correlated as well. You just got to make sure that they're good quality, synthetic versions, of Bitcoin or ETH or something like that. Because we saw what happened with Aave, with the RS ETH. So you've got to be really careful, and you just got to understand your risk tolerance.
So you see what the gentleman here who's posted Ellis House, 172
Yeah,
Ellis House, great comment. He's saying, I was
yeah,
hoping that my liquidity pools would be a good place to park, USDC and ETH in full range pools. So he's saying full range pools during this
yeah.
bear market, but you've got me, wondering about stopping. So if you're in full range pools, basically like the best full range pools I think are not going to be on Uniswap. I don't think that the volumes on Uniswap are great enough. I think they're probably going to be on Aerodrome. But if you're providing, yeah, well, if you want to generate the most yield,
Yeah,
probably on Aerodrome, I think.
yeah.
But then you're earning Aero, and I don't know
Not
about
necessarily.
you.
Not
Well,
necessarily.
right, but if you don't stake your LP, then you earn 10% less.
No,
So
that is correct. That is
yeah.
correct.
So, but like if you stake your LP, then you're earning Arrow. So that's a real consideration that you gotta think about because number one, you're gonna have if there is
That
another leg down in
that can
in the
work for
market.
or against you, and
Well,
depending on
if there's a leg down, it works against you a lot.
yeah. But if it goes
Yeah,
up, it works for you. If
true.
it doesn't move, then
But then
you
you
can
got to
just
hold the Arrow token though, and that thing is very
not
volatile.
necessarily because you can swap it. You can claim those fees, and then you can swap it for USDC, Bitcoin, whatever. There's a lot of things you can do, but everything you're saying is correct, David. I'm just
Right.
pointing
So
out.
I like to think about the risks because he's talking about full range liquidity provision during a bear market, and
And full
so
range is different. Full range and concentrated ranges are very different.
typically much more. In fact, almost always especially in stablecoin pairs like ETH paired with a stable in concentrated. That means your gamma is much greater than it is in full range. So gamma is your impermanent
And the
loss.
closer that you move to the upper and lower band of
It's
that
the
range,
lower band. The lower band, yeah.
or just the lower. Okay, it
Yeah, just the
accelerates.
lower. Yeah,
Okay,
your gamma accelerates. It's almost like pin risk when you're trading options. The closer you get to expiration, you're short, premium, your gamma explodes. The closer you get to expiration, and the closer the underlying asset gets to at the money, then your gamma explodes there. So that's the same thing that happens when you provide concentrated liquidity in a stable coin and a volatile asset pair. When the price of that underlying asset gets down to the bottom of your range, your gamma explodes. So that's your impermanent loss risk. So yeah, yeah.
in Ellis House, I actually used a USDC ETH pool there for quite some time, and I was actually tracking the total value of the liquidity daily, that of that of what my deposited liquidity and how much I was earning in fees daily over time, and I actually did quite well. But it can work the opposite way as well. I highly suggest that if you're in these to track, start a spreadsheet and each day go in there and look what the total value of your deposited liquidity is and how much fees you're earning, and make sure the fees are outpacing over time, or outpacing what you potentially are losing in your deposited liquidity.
Yep, gotta stay up on your P's and Q's.
It's true. It's true. All right. So next up, we got Near Protocol kickstarts 36% APR chain abstraction campaign. As capital targets AI adjacent protocols, Toolbit Exchange launched a high yield promotional event for Near Protocol, offering a 36% fixed APR. The promo capitalizes on Near's swelling network growth, which recently pushed its weekly active user base past 18 million accounts due to its focus on chain abstraction and user-owned AI.
Oh yeah, so dude, Near has quickly become one of my favorite protocols. I really well.
I
So
know that
let me
you,
make a distinction though.
well, after we
Like,
did that deep dive, I know that
dude,
you,
amazing.
well, you were
It's
texting
amazing.
me, and you were like,
Yeah,
dude, this is freaking awesome.
it
Switching
is,
between assets and, cross chain and all that different stuff.
bro. It is. It's literally like Near solved cross chain bridging. That's what they
Yeah.
did. They solved cross-chain bridging, decentralized, censorship resistant cross-chain bridging. And that is a big, big deal. And if we could actually take a look at Near Intents just real quick so I can show everyone, Mike, because there's a lot of value over there. Let me hop into that wallet and just show everyone what's going on here, because
Well,
this
everything
is.
else jumping. Near's actually up 6.2% today.
Oh yeah, and so is Ton. So I see Near up 3.5%. I guess it depends on which where you're looking, but Ton just pumped in the last minute, the last couple seconds, another 10%. Literally in the last couple seconds. Now it's up
Tom
20%.
just doesn't excite me, with the whole
I
Telegram
like
thing.
Ton. I like it.
I know you.
I actually
It,
enjoy it.
you know what? Your aerodrome is Tom. It's like, it's like you're excited about it. I'm not so much. Arrow, I'm excited about, and you're like, not so much.
I mean, they got to just fix their tokenomics over there. But so this is my near.com account, and these are decentralized, and you can just create one of these and log in with you can literally create a hot wallet on an EVM chain. If I just go back here, I want to show everyone how easy this is to set up. You can set this up using your wallet of choice. Whatever it is. Let me just sign out here. So this is near.com. This is like game changing stuff. So you could create a wallet with, a passkey. You can create a wallet, a near.com account with a Near wallet, with an EVM chain wallet, with, Phantom or a Solana wallet. You can use, a Tron wallet. You can use a Stellar wallet, a
Use a
Ton
Ton
wallet.
wallet.
Yeah, and the Ton and Tron wallets, I've never connected directly. Actually, no, that's not true. I've used Ton. I haven't used Tron yet or used Stellar, but I've used all the rest of them. And dude, they're great. Like I choose Rabby because I operate on Ethereum chains mostly. But after you connect, then here's your account. Now, let's say that you want to go from USDC on the base chain to maybe something like Bitcoin natively on Bitcoin layer one. Easy. Go ahead and hit receive, and then select your token that you want to send to your near account. So, we're going to use USDC. Select the network. Okay, we're on base, so we're going to send it on base.
You want me to send you my wallet address real
Yeah,
quick?
you can send me some assets here. I got my address right here, the QR code.
Nice,
Go ahead and scan it.
nice.
And then, so once you send USDC or whatever asset to your near account, then you can swap the thing, permissionlessly. So if I've got, maybe I've got, and by the way, I lost like 10 USDC on Sui because the chain went down. I sent,
Oh
I
yeah, I
sent,
saw that. I think Jeff sent us a message over the weekend that like it was down for a while too.
dude, it was crazy. Yeah, so I lost some USDC on the Sui chain because the chain went down like several times as I was sending it to my near account. So yeah, that sucks. So fuck Sui. So over here, let's say that maybe I've got that USDC in my account, right? And I want to swap it for spot Bitcoin. Well, easy enough. There we go. I swap for spot Bitcoin. Now I've got Bitcoin in my near account, and then I can send that to my Bitcoin wallet. Okay, maybe I
Now,
want to get
now is that native Bitcoin or
native.
is that
It's native.
oh,
It's native layer one
oh
Bitcoin,
see
right?
that's cool.
That's
That's
cool
cool.
as fuck, right? So maybe,
Yeah.
okay, maybe I want some Solana. Okay, I can swap into Solana. Maybe I want some XRP. I don't know why you'd want that, but like, okay, maybe you do. Okay, so how about ETH? Okay, great. I can grab some ETH, or I could grab some Zcash. How about some Zcash native, and then you can send it to your Zcash wallet. So it's basically solved cross-chain native bridging. It's amazing. It's really, really amazing. But the question you got to ask yourself is, does that mean value accrual for the near token? Is that what that means? It
Well, we did
seems
that.
like the answer
We
could be
did that.
yes.
We did that deep dive. We need to post it on the website, but we did that deep dive on near that. Yeah, I mean, it appears that there is some value capture, by the token from the success of the underlying chain.
Yeah, it looks like there could be. Need to do a deeper dive into that, but if there is, then it probably makes sense to buy some near, even after it's pumped. Simply because like this is like game changing stuff right here. Being
Yeah,
able to
it really
to
is.
swap like this natively like this, and then what you can do is you can build near intents into your app. And so that means that like if you want to accept, if someone's got, Zcash and they want to be able to use your app on, an Ethereum chain, well,
Mhm.
all of a sudden you can allow them to deposit and swap that Zcash directly
That's
for
huge
USDC on
for
base.
that whole digital, self sovereignty, aspect of what we're so passionate about here.
Dude, it's amazing. It really is. Like you can build near intents into your DApp, and then
Well,
all of a sudden you can accept deposits from any chain.
Well, that will allow people that want to invest in things like Zcash and those private privacy tokens that have value, to hold those assets and be able to use them to for everyday purchases.
Yeah, I think it's for me, Mike. This is one of the coolest things that I've come across in a while. Like, because I don't know about you, but dude, bridging's scary, or at least it can be.
Oh,
Uh,
dude, there's exploits and sandwich attacks and all
it
kinds of
takes
different.
forever. It's
Oh yeah, and
dangerous.
you're just sitting there like hoping
You're
it
sitting
shows
there
up,
like, where is it? You
right?
know,
Especially Ethereum, you're like freaking 20 minutes later.
I know exactly, man. But Near fixed that. Like they literally fixed that, and it's damn near instant. Like, it may be 2 minutes, 5 minutes sometimes, depending on the chain, up to maybe 20 minutes. But that's still, look, these are atomic swaps. So it's a hell of a lot different than something like Change Now. So Change Now is what I used to use, but
Well,
I'll never use it again. Near is amazing.
Well, we got about 5 minutes. I want to touch on a couple of things before we pop over to the deep dives. But the corporate Bitcoin treasury aggression, and we need to hit up on near again because we need to have that in the library.
Yep.
Um,
I've got the research. I can put it in there.
oh, sweet. Macro asset firms are treating the local BTC price dip as a consolidation window. European digital asset firm Capital B announced the final closing of its latest equity backed operations, immediately absorbing another 4 Bitcoin into its corporate reserves through Swiss quote Bank Europe. This brings their total balance sheet holding to 3,139. Technical context: crypto versus TradFi. The correlation between crypto and tech remains strained, while U.S. indices, and I know that you've been looking at the correlation between tech and crypto and how it's kind of decoupled as of late. While U.S. indices like the Nasdaq have remained relatively resilient near the 30,500 mark, crypto technical setups show a multi-month selling bias. Solana leads the major large cap corrections, down 33% from its 2026 opening price, while Doge has demonstrated unique relative stability, down only 14%. So you got a meme coin that's holding up better than Solana. All right.
Yeah,
So what are you
very
seeing on
true.
that? We got about 3 or 4 minutes on that topic. What do you see on that, David?
Okay, so what I always like to think about what's going on in the charts, right? And so I'm going to go ahead and jump in here to Solana. And Mike, I've got my Solana Seeker right here. I'm charging the thing.
I'm
I'm going to
sorry.
give this. I'm going to give this another shot, man. I'm going to give it
All right.
another shot because I was playing around with Cake Wallet last night on my Android, and I was just thinking, like, man, if I had a hardware wallet built into my Samsung phone, then I might be able to use that to control a Cake Wallet account, which
Mhm.
can then control every chain. And so, what that means, Mike, is if I've got a hardware wallet built into my Seeker, right, which I do right here, I got the Seeker right here. So, maybe I'd take it out of the case so that people can see this thing. Like the build quality on it is, I was just unimpressed with it, but so here's, oh, what the
We,
fuck?
we lost your camera.
Okay. What happened to my Oh, you know what it is? When I unplugged it. So here, let me start this again. There we go. Okay.
There.
So yeah, so here's the Seeker. So, in the case, it looks like just a regular phone. You would never know that this is, that you've got a hardware wallet built into this thing. So, uh, this hardware wallet, they call it the Seed Vault. And the reason why I'm going to start using this phone is I think, install a Cake wallet on here and then control a Cake wallet with my hardware wallet built into the phone. And so, what that means is, if I combine the hardware wallet on the phone with Cake Wallet and with Near Intense, then I can go from literally any chain to any chain and use a dApp on any chain natively from a hardware wallet on my phone. And that's actually pretty cool.
Why don't you just create a DApp that does it?
Well, yeah, but I mean, if it already exists, I just want to see if it'll work. I want to see
Yeah.
what the what it's like to live off of a phone like this. So I kind of, I'm going to give it another shot. The Seeker, I'm going to give it another shot and see what happens. But if we're taking a look over here at Solana, I want to start by looking at the 4 hour because look at this. This is just sideways chop. If we got the lows in Feb, the lows that we put in February. We got two levels of resistance up here. The first balance was in the middle of March. The second balance was in the middle of May. So lows in Feb, March and May highs, and breaking down below support today. So, Solana really having a rough go of it, year to date, and one of the poorest performing, alts year to date. So my thought process here is, this is a bear flag. This pattern that we're looking at here, this is an extremely well defined bear flag, and is starting to confirm, meaning it's starting to break down below this level of trend line support. So if we get a real push to the downside out of Solana, well, where does it go from here? Well, when in doubt, zoom out. And I zoom out here to a weekly, and
And
now
you
I
were
can
saying
see,
30s?
I think the 30s. So, now that we see the weekly, this is a head and shoulders pattern. And this head and shoulders pattern itself has also confirmed. So if we just throw down the neckline, here's the neckline, and that has broken. So the head and shoulders confirmed. We've got a big bear flag that is confirming as we speak. So it's like, oh man, if we get an acceleration to the downside out of Bitcoin, then you could totally see, this thing, Solana send lower, like much lower. I think $30 could be in the cards, like maybe this month,
Mm,
like, because the last sell off was 3 weeks from 140, 150 down to 70.
mm,
So that was 50% in 3 weeks. And to go from 80 to 40 this month, not out of the question.
mm.
June tends to be weak in the midterm year for Bitcoin. So, this is a Bitcoin bear market still. And if Bitcoin is weak this month in June, Bitcoin is starting to break down. So or it's almost there. Like if we get a breakdown this month out of Bitcoin, then you might see a send, down below the 200-week moving average down to like 51K. And if you see that, oh man, Solana's fucked. Like
Yeah.
Solana's going to go to 30 or $40. But that might be the low for a while, So like if there's actually a breakdown this month in June, then you want to be thinking about buying, this month, literally, on a bounce. Because if there's a big move lower, then you want to be buying that at least for a bounce play.
Mm.
But that would not necessarily mean that the bear market is over. That's not what that would mean. All that would mean is that, hey, you were able to buy a bounce. The bear market won't be over until October. So, once it's over in October, then you can start scaling into stuff that you might like, maybe like near, not bad. Near's not bad. And then you got Ton. I like Ton. I often like Ton. I like operating on, in DeFi from Telegram. I kind of like that. Um, but here's some stuff that you should avoid, SUI. So definitely avoid this one. It looks like if SUI breaks down below 80 cents, man, it's going to 40 cents. So, and this, like, you can't have a chain where, it can go offline and you just lose money. Like, that's bullshit. You can't have that.
No, that's crazy, dude. I mean, imagine if you were sending like a sizable amount of money, not just $10, and it just freaking disappears. That's not good.
No, no, that is definitely not good. So yeah, those are my thoughts on markets here. But here's another thing though. This is the Nasdaq. As long as this keeps levitating higher every single day, then the downside out of crypto will probably be contained. Like we might not have that like, minus 10 or 15% move to the downside out of
What's
Bitcoin.
that song? Can you take me higher? Can you take me higher?
Yeah, seriously, man. I mean, look at that. Don't you wish crypto would do that?
Dude, I just needed to do it once. Just once. Just
Yeah,
fucking just send like you've done in the past. Just do
well,
it
the
once
hype. You got to get on
already.
that hype train, bro. But you got to
I,
wait.
I'm not buying into this freaking
I
pump.
mean,
I
if
re,
you, Mike, if you knew nothing about hype and you're just
yeah.
looking at this chart, what does the chart tell you?
To wait for a pullback.
It tells you resistance. That's what it
Oh,
tells you.
absolutely. But
you
it
know,
might bounce off that, and and get a correction, and I get a better entry, or it could go above it, and like you said, potentially send $100 or more.
I mean, look, I think that if hyperliquid hype, if it breaks above 75 or like $76 and then up to 80, I think the next stop is 100. But then it's like, okay, there's this momentum that will just feed on itself. And like you break above 100, then you're looking at 200. And like if it goes from 100 to 200 like fast, like in a week or maybe days, then like okay, now you're talking, okay, the sky's the limit. What are we talking about now? Now we're talking about repricing.
10,000, 10,000.
No, no, I'm thinking about like what's reasonable in
Oh,
terms of its
I'm just
market cap.
clowning 'cause that's what everybody
I
says about
know, I
fixed.
know, but like so if it's traded, if it's at a, let's call it a $20 billion market cap, let's just say, well, then, okay, what's it going to go to? Well, look at some competition. BNB, 92 billion. So could we see Hyperliquid move from 20 to 100 billion? It's a 5x. Could we see the token go from 70 to 350? It's a 5x. Sure, why not? Of course, especially if it breaks with momentum up above 100. If it runs to 100, really starts pushing, man, then hype could totally run to 300 or 350. That would be, I mean, look at this pattern. This to me, this looks like if we get a breakout, then dude, you got to think big, think big, like, and then send it and do it with some leverage and don't pussy out on the leverage either. Okay, Mike, you
No,
gotta
we're
do the
talking
100x. Yeah,
50x,
100x. Okay,
100x. Just,
150x.
yeah, just
So,
freaking send it.
yeah, just send it, man. Because
I might
like,
do that with $100, but yeah, I'm not
right, yeah,
in no sizable amount would I do that.
$10,000,
Yeah.
150x leverage on the breakout above 75. I mean,
half,
dude, that
half my portfolio. We're just gonna freaking take like 25, 30 grand and just freaking send it.
just send it, man. Full send. So I like it. I like it. But I'm waiting for the go no go, like the entry. I don't see the entry yet. So I mean, I just want to wait for a breakout above right here. That's the level for me. That
Yeah.
$75 level. That's the level. Like basically, we get above this white line, and then it's like, okay, I'm going to take some amount of money, and I'm going to be, just levered long, like a crazy person, thinking, okay, we go to 350 from
Well,
here.
let me know if you do that, because I mean I probably will take a little bit of liquidity and do that if it just not necessarily to you know obviously not buying it spot, but I definitely want to get a levered long in just so that I can take advantage of the momentum, the freaking hype, you
I
might say.
mean, here's the thing though. When I zoom out on this chart, this looks like resistance, but levels of resistance can break. So
And they can
if this,
support.
well, yeah, exactly. So if this breaks, RSI is at, elevated levels, right? But RSI can remain elevated for a long time.
Yeah.
So, if we on the weekly, if we see an RSI in the weekly is, in the stratosphere right now. But just remember that RSIs can stay elevated. It could stay up here in the 80s and even go to the 90s. Okay. If we take a look, let's see what did BNB do? When it broke out, what did its RSI do back here? Back in what was that, 2021? Yeah, the beginning of 2021. Well, its RSI ran to 96 and hype is at like 80 something. But it ran up there and it stayed up there it stayed above 70 for what was that, like 3 months. So just remember that RSI, while useful, it can, also stay elevated for a long, long, long time. So if I see RSI at 80 or 81, and I know that BNB, when it ran, the RSI ran up to nearly 196, well, then, there might be more upside left for a hype, especially if it breaks out above 75 or $76. So I closed my longs, took my profits, whatever, but I'm just, waiting to get back in. I'm waiting for that entry, waiting for that go no go, and then I'm gonna do something irresponsible. That's what I'm gonna do. So because I mean, you got to believe in something at some point, man. And if it's
You don't believe
hyperliquid
in something,
versus
you believe in nothing.
yeah, if it's hyperliquid versus Binance BNB chain, dude, I take hyperliquid every
Oh,
day,
all day long, dude. All day long.
all day long.
And twice on Tuesday.
Yeah, exactly. So that's what I'm thinking about here. So Mike, you want to take a look at that research on
Yeah,
on hyperliquid?
let's get into these deep dives.
Yeah, let's check it out, man, because this is some really quality content here. So I want to go ahead and bring it on over into the Intel library for everyone, and just so that everyone's aware, you can find our Intel library over here at the node.pro. It's the very first link in the header. Just the Intel library right there. It's uh, I think that this is going to be probably one of the most visited pages on our website as people start to become
Oh,
aware of it, and
absolutely.
we publish more research. I mean, this is like some of the best quality research out there. So just hop on over to the
Well,
node.pro.
and just the way that it's, the way that it's put together is, I mean, yeah, you're not going to find better content out there. And again, it's stuff that you can go through at your leisure. It's not like you have to tune in and watch, or you have to watch the whole show to just get the deep dive on the project you're interested in. You can just go and go through the content, and you can choose if you want to do the video, if you want to do the slide presentation, if you want to read it, if you want to listen to it. There's whatever your flavor is.
Okay, I'm happy that the login just worked there. I was kind of worried that the login wasn't going to work. Oh man! So there we go. There we go. The login worked. Now
Nice.
over here in the deep dive, dude, this is beautiful. The way that it lays this out. Here's the written report. Okay, maybe it doesn't do a good job of formulating tables or formatting tables. It doesn't. Yeah, so I need to fix that on the written content so that it's a little bit easier to read here. But and let me scroll down here so everyone can see. So here's the slide deck on Hyperliquid. We can take a look at that. You can download it if you want to just have it for yourself. The infographic, that's the thumbnail, and then here's the source research. So if anyone ever is curious about the research that we use to create these deep dive pieces of content, then you've got it right here. Here's the source document. So that's all the information about the Hyperliquid tokenomics. Let's go ahead and play this piece of video content, Mike, and let me know if you can't hear it.
I can't hear it.
You can't hear it? Okay.
No.
Let me go ahead and restart the thing. For some reason, I wish I knew what the reason was why it doesn't share audio like that, even when it says it's sharing audio. But okay, here we go. Let me go ahead and back this thing up. There we go. And restart.
Decentralized finance ecosystems operate under immense mechanical tension, driven by structural forces of supply and demand that must be balanced to maintain stability. By mid-2026, Hyperliquid's native token, HYPE, has established itself as a top 10 cryptocurrency by circulating market capitalization. However, the data dashboard reveals a highly concentrated circulating to fully diluted valuation ratio. This metric indicates a tightly restricted initial float, where the vast majority of the asset's maximum supply remains locked and yet to enter the open market. The friction in this model intensified in November 2025, when the core contributor allocation exited its one-year lockup and entered a continuous 24-month linear vesting schedule. Assessing whether the market can absorb this aggressive supply expansion requires a rigorous look at the protocol's native supply sinks. In the decentralized exchange vertical, Long-term survival depends on the mathematical capacity of structural sinks to offset incoming dilution. The hype genesis distribution was designed for community neutrality, intentionally bypassing private venture capital and pre-negotiated market maker allocations. This structure delayed the primary threat of dilution until the expiration of the one-year genesis lockup. Post-cliff, the schedule introduces 4 million hype tokens monthly, exerting downward pressure on valuation. To counter this, the assistance fund uses trading fees for open market buybacks, permanently burning purchased tokens. Deducting this programmatic burn from the total defines the current outstanding total supply metric. While fee burning provides a baseline defense, the math reveals a stark disparity. In the first quarter of 2026, the assistance fund retired approximately 114,000 tokens, which represents less than 3% of the supply entering the market in a single month. The protocol requires more aggressive structural sinks to remain balanced. Hyperliquid Improvement Proposal 3 establishes the protocol's primary structural sink by decentralizing the creation of perpetual markets. The HIP3 framework allows external developers to launch independent trading markets directly on the native execution layer. Deployers post a security bond of 100,000 hype tokens per execution network. By mid-2026, over 140 builder-deployed markets activated, including Trade.xyz's S&P 500 contract, collectively locking millions of hype tokens within protocol smart contracts, removing them from circulating supply. Through HIP3, Hyperliquid converts hype into mandatory infrastructure, requiring developers to lock massive liquidity to keep their independent trading markets operational and active. Supporting institutional execution speeds requires separating the blockchain's core functions into two distinct domains. The architecture splits between Hypercore, the gasless order book, and HyperEVM, the smart contract layer. Hypercore handles order matching and liquidations with zero gas fees. Conversely, HyperEVM meters gas exclusively in Hype, creating a continuous demand sink for smart contract interactions.
Okay, so I got to just step in here and talk about Hyper EVM for a second. The protocols on Hyper EVM have a lot of room for improvement, let's say, but because it's almost like paired with Hypercore, you can use a lot of your pieces of collateral on the Hyperliquid layer one in the Hyper EVM. So that's pretty cool. That is actually really cool. But there's more work that needs to be done to make the protocols on Hyper-EVM better and a little bit more user-friendly. Going back and forth between the two can be kind of confusing and kind of a pain sometimes.
By mid-2026, HyperEVM's gas consumption is driven by over 170 active applications, including automated yield aggregators and cross-chain solver networks. Algorithmic high-frequency trading bots drive this gas demand, using native hooks to trigger smart contract execution automatically based on real-time Hypercore price updates. This bifurcated design subsidizes retail order flow while taxing heavy institutional programmatic demand, turning every automated trade into a token sink. Examining the assistance fund metrics from the first quarter of 2026 reveals a critical vulnerability in the programmatic buyback model. Data shows a clear anomaly. Buyback capital contracted significantly, even as hype prices reached all-time highs. This exposes the pro-cyclical trap. When trading volumes and fee generation drop during rising token prices, the capacity to absorb supply unlocks diminishes. Hyperliquid initially attempted to offset this by launching USDH, a native stablecoin intended to capture reserve yield to fund further buybacks. However, users continue to favor USDC, meaning billions in reserve interest accrued to external issuers rather than the protocol.
Wow.
To resolve this inefficiency, Hyperliquid executed a structural pivot, sunsetting the native USDH token. They implemented aligned quote assets, routing all collateral into USDC via an integrated Coinbase treasury. This shift demonstrates that deep, unfragmented liquidity is more critical to platform health than attempting to fix a pro-cyclical burning mechanism with a native stablecoin. We return to the primary threat established at the start of this analysis, the relentless monthly expansion of the hype supply. Stability requires integrating three defensive forces. Builder bonds, EVM gas sinks, and buybacks work together to press down on the rising supply curve, creating a dynamic equilibrium. This institutional-grade flywheel demands constant calibration to maintain balance. Data proves relying exclusively on fee-funded buybacks is a flawed strategy against scheduled supply unlocks. Instead, valuation is sustained by the compounding expansion of mandatory builder bonds and the continuous gas consumption of smart contracts. In decentralized finance, long-term resilience depends on a protocol's capacity to programmatically mandate continuous institutional utility.
Hmm, that was really interesting. I want to take a look at the slide deck, though, Mike. Let's see if I can bring us on over to the slide deck here, because now that we know that there are actually a lot of risks to this buyback model, um, but there are ways that this could be done better. Let me see if I can take a look at this thing. I don't know if it's going to let me make it bigger or not. Okay, that's about, and then I got to zoom in here. Okay, so let's just take a look at this. I want to see if maybe there is, okay, so now I'm zoomed in on the document. So let me go like that, hyperliquid flywheel. So what I'm looking for, and this isn't going to view properly, so I got to download this thing. And then I'll go ahead and share that instead. Okay, so we're looking for the hyperliquid flywheel analysis. And what I want to do with this is I want to share this document so that we can take a look at this, because understanding the tokenomics is critical. So let's go ahead and share this document here. And then I'm going to go ahead and bring this up to the screen so we can all see this here. Okay, so this is the piece of research that I want to run through. And let's just take a look at this real quick. So let's see. Supply snapshot, structural risk. Okay, that's great. High FDV concentration relies on continuous demand side sinks to absorb that linear vesting schedule. And look, so far it's working. Okay, so it's working so far. So far, so good. So far, so good. Okay. Now, if we take a look at the diagnostic matrix. So what is the double capture thesis? Hype's premium is achieved because it forces the market to price it both as a cash flowing perpetual exchange and a secure consensus driven layer one. Wow, that revenue multiple is really high though. But for comparison's sake, think about like something like Render. It's like 300x, and Render's a shitcoin. So like, you could definitely see that multiple expand. Okay, supply limit, programmatic burn. Look, the supply is shrinking, but there's so that's the float. The float's actually quite small. Wow. So it's not. Oh wow, this thing could run, man. So a highly concentrated initial float, the market's capacity to absorb supply shocks without downward price pressure relies entirely on the continuous acceleration of those protocol demand sinks. So here's the supply expansion. This is the vesting schedule. So at the peak valuation, the linear contributor vesting schedule equates to $730 million in potential monthly market selling pressure. Wow. So if the core contributors, basically like the team, those 11 guys, if one of them ever decides to dump, that'll crash the whole thing, or at least it'll be very, very difficult to absorb that selling pressure. So, yeah, here's the Genesis distribution. So just keep that in mind that if anyone decides to dump this thing, it could be difficult for it to absorb that. And then you've got the underlying architecture. So there's the hypercore layer one, hyper EVM, the programmable layer with all of the dApps. And then you've got, okay, so the demand engine, the assistance fund, repatriation pipeline. So trading activity, 99% of all fees go to the assistance fund. It collects USDC. And then on the open market, it buys hype, and then it sends that to a burn address. So you've got this, basically this flywheel, which is great. It's removed 4.5% of the maximum token supply to date. So that's a great thing. It establishes a permanent non-discretionary bid, and that scales directly with platform trading volume. So, this is really, really good. Now, the treasury optimization, this is where I think USDH comes into play. So you've got the stablecoin pivot. So the USDH stablecoin, it failed to cross any meaningful adoption thresholds. So billions, because people were using USDC instead of USDH. So the USDC sat idle, which meant that the yield was going to Circle rather than accruing to the hyperliquid treasury protocol, the protocol treasury. So what was the solution? Well, in May, last month, there's an optimized framework. So this is the aligned quote asset framework. So Hyperliquid is sunsetting USDH, a limited liquidity fragmentation. So Coinbase, there's a Coinbase integration, it looks like, and that's going to ensure that massive reserve base is fully optimized for deep unified liquidity. So if Hyperliquid is integrating Coinbase and USDC, then maybe there's an opportunity for even more, demand for hype. That's pretty cool. That's pretty cool. So here's the consensus sync, validator and staking utility. So you earn a very paltry yield to be a staker or an active validator, but it's 45% of the liquid float is locked up by those 27 validators. So, and they're not selling; those are institutions. So that's a big deal. That's a big deal. Institutional lockup. Yeah, here it is. Just a little bit about the institutional lockup. Okay, great. And then you've got these HIP 3 and 4 mechanics. So HIP3 is decentralized perps. HIP4 is decentralized prediction markets. Pretty darn cool. But in order to be able to deploy one of these, you need a lot of money. So, the security bonds, look at those bonds, 500,000 hype or 1 million hype. Wow. So technically anyone can launch one of these, but you've got to be well capitalized. But that just means that if you're locking up that much hype in a security bond, that's a demand sink. That means that those tokens can't be sold. They're not part of the liquid float. So that removes tokens from the liquid float, which means that, price is set at the margin. So whatever the margin of float is, that's where price gets set. So if that's shrinking all the time, number go up, man. Financial performance and cash generation. So generate a ton of revenue. That was the peak, but still doing really, really well. It's one of the most profitable decentralized finance applications globally. I think that USDT, Tether, and USDC Circle are the only ones that are more profitable than Hyperliquid is. So the synthesis, you got this. Okay, so let's check this out. When a trading volume slowdown coincides with rising token prices, the assistance fund buys exponentially fewer tokens. Its capacity to absorb the massive fixed monthly unlocks is materially diminished precisely when it is needed most. Oh, wow. So when number go up, the assistance fund buys more or buys less? I didn't realize that. We need to check in on that. But okay, so now that we've learned a lot about hype, what are your takeaways from this, Mike? What do you think? What do you think about this?
Well, I mean, there's a couple of aspects that kind of jumped out at me, but I definitely see 2 or 3 things that gave me pause. As far as my bullishness on it, but I mean, they weren't deal breakers. It was just things to keep in mind, before buying the token. Making sure that I'm fully knowledgeable on those things before buying a position of this token. But overall, I mean, I think it's a great great protocol, and the tokenomics are great. As long as the protocol remains profitable, as long as it's generating fees, and those fees are being used in that programmatic buyback and burn of the token, helping it be deflationary. The fact that you said there was like 11 of the the developers that hold a very large amount of the hype token is concerning, because if it does do some astronomical pump, are they going to be selling into that pump, or are they going to do a massive dump of the token at some point? So if it breaks that that line of that line of resistance that you had on the chart there before, and starts going to 100, 150 or more, are they going to be selling off large chunks into that pump to buy back in when it retraces? These are just all things that go through my head.
Yeah, same thing for me. I really do think that for hype because it is so much better than BNB.
Yeah,
There's an opportunity for that thing to really put in some multiples even from where it's currently trading.
I
So
do like that integration with base though.
me
That that
too.
that makes me very bullish because I mean, as anybody that's watched the show for more than 5 minutes, I'm very much a base base not maxi, but I just see them one. It doesn't have a token, and I actually like that. There's really no need for it. And two, I see things like Aerodrome, Morpho, a lot of other chains, Hype, and a bunch of others, even Plume, where they are integrating with it. They for cross liquidity. So I more and more I'm seeing a picture being drawn out of certain layer ones and layer twos, and certain protocols where the liquidity seems to be flowing into that as of right now is going to be the kind of the future of that hybrid finance of TradFi and DeFi, and I see base network being a core piece of that. Just from my and a big reason for that is the onboarding and offboarding of Coinbase, of that major trusted platform for institutions for for
Custody.
custody, for custody, of those institutional assets. They hold, a lot of those ETF, Bitcoin ETF assets and, things like that. But the, onboarding of, new retail, and, new institutions. So I just see it being a major hub of liquidity myself. And so anything that's, making strides to integrate with that, I see as I need to take a look at it.
Yep, I definitely agree. And so I think where I want to go from here is I want to
Oh,
just
check this
take
out.
yeah.
Crispy is he's commenting on the deep dive, material. He says very well explained. I read for hours and days to get that far. So yeah, no, and again, that's why me and David and Jeff, decided to do the library, the repository for these deep dives, is so that you don't have to. You don't have to go out and tear through white papers and tear through different websites and different things like that to get this information and get knowledgeable. I mean, hell, how long did that take? Like, maybe 15 minutes, without me and you talking. It was like maybe 10, 15 minutes. And you at least have a general idea of what is hype and what is the hype token and what are the tokenomics and the mechanics of it. It's just that quick, that simple. It's the same thing with the newsletter. It's why we wanted to do that, is to save you the time of having to manually go around and dig all that stuff up. The live calls, instead of going through the painful process of making all the mistakes, that tuition, that market tuition that David talks about, where you're going through and you mess up on a wallet and send liquidity to the wrong place and you lose it forever, or connect to the wrong thing, or didn't cancel out a freaking permission, like permission that you gave a protocol to access your wallet and your assets. Just those stupid mistakes. I mean, that's why we're here. And for the most part, most of it we don't even charge for. We just want you all to be successful.
Yeah, no, I would agree. I would agree with that. And where I want to go from here, Mike, is I want to take a look at the global stablecoin landscape. And the reason why I want to take a look at this here is, the thing for me when it comes to stables is it decentralized or is it not? What's backing the stablecoin? Is it backed by treasuries or some type of fiat bond? Or is it backed by something else? Is it a collateralized debt product? What is it? So I really
Is
want
it
to.
algorithmic? Is it there's so many aspects to stable coins that you need to be aware of, because I mean, a lot of us, for a long time, I just thought a stable coin was a stable coin. And I thought that if I entered into a liquidity pool where it was, two stable coins, that it was, virtually, other than smart contract risk and protocol risk and stuff like that, risk free. You have a dollar over here and a dollar over here. It's like I thought that it was risk free, but very quickly, I think if you've been in the market for a minute, you've seen, there's a lot of quote unquote stable coins that have depegged, for very, varied reasons. And so not all stable coins are made the same. Is it compliant? Like David's talking about, can they freeze your assets for some arbitrary reason? If you have a bunch of, $1 million of USDC, can they just hit a button and now you can't use it? That's a CBDC.
Right. Exactly.
So, sorry,
that's exactly what it is. And so that's why I was, so
there's being super sneaky about freaking implementing CBDCs, basically.
Exactly. They've just regulated Circle and Tether to, and any other large stable coin to the point where they're basically a CBDC.
Yeah, if they can be compliant.
Right. So, I'm taking a look here, and it looks like the formatting of this is a little bit okay. So I've got to still work on the way that the written content gets formatted to make it better. But good slide deck in here, and some pretty good source material. If I scroll all the way down here, so that's the stablecoin landscape, and I think that's the same document. So I need to add in that piece of source material because I think what I did is decentral. Okay, so I didn't actually add that in. Let me go ahead and just do that real quick. I just want to download this as a PDF, and then I'm going to update the source stablecoin market research. So I want to update this piece of source material just real quick. Stablecoin market research, stablecoin schematics, stablecoin market research. Okay, so hyperliquid stablecoin market research. There it is. And I'm just going to update the document here. And then once I update it, let's see if it updates immediately in real time on the screen or not. That might be kind of cool because it's this source document. And I'm going to go ahead and just refresh the source document, and it should be a just like a Word doc here in a second. So let me.
Beer's up to almost 10% on the day, and Canton making a little baby move.
There we go.
1.5%.
So there's the source material. Awesome. Yeah. So I mean, taking a look just around at markets here. So near protocol having a pretty good day, and Ton, my buddy, is having a pretty good day.
My buddy and me.
So let's take a look over here. Let's run through this research. I think this will be a good one. I want to learn more about stables, right? So Mike, just let me know. Were you able to hear it right there as I was playing it?
No.
So you can't hear this?
No.
Man, that is kind of frustrating how it does that. Let me go ahead and stop the screen share. Let's start this thing back over so that we can run through and learn a little bit more about what exactly are you holding when you're holding one of these stables? Can it be frozen? And if it can be frozen, what's the difference between that and some type of TradFi account? Like you could, without realizing it, be holding a CBDC. And what are the alternatives? Are there decentralized stablecoins? Well, there are, and I hope that this piece of video content talks to us about it. Let's watch this.
The global stablecoin market has reached an all-time high of $321 billion, facilitating $33 trillion in annual transaction volume. That represents more value moving across digital networks than Visa and MasterCard combined. This growth is built on the Treasury advantage. Stablecoin issuers now hold roughly $155 billion in short-term U.S. Treasury bills, making these protocols some of the largest sovereign debt holders in the world. Despite its global footprint, this market is almost entirely dollarized. Non-US dollar stablecoins account for less than 0.5% of the total market share. To manage this systemic footprint, the U.S. government enacted the Genius Act in July 2025, the first federal framework specifically designed for payment stablecoins. The law is explicit. Issuers must maintain 100% liquid reserves. and prove they have the technical capability to freeze, seize, and burn assets on-chain in compliance with federal.
Look at that. See? That's what I was talking about. What happens if you're holding Tether or Circle's stablecoin products and then some judge somewhere says, "Hey, we don't like that person's politics. He's he's speaking honestly about
They
political issues."
they potentially don't even need a reason. It doesn't
They
even
could
need to be. It doesn't even need to be a judge. I mean, we've already seen with the FISA courts, and we talked about that on the red pill, where they don't even need a warrant anymore. With what was that? I always forget the name. Not the Liberty Act, but the
freedom.
Freedom Act. No, it was
Patriot.
Yeah, the Patriot Act.
Yeah.
I mean, due process, all of that.
Because Mike, what's more patriotic than illegally spying on American citizens, right?
Exactly.
Duh.
And so, I mean, basically, they can legally now, because of that they signed into law, put a nice wrapper on it, a nice pretty bow on it, by calling it that. But they can basically steal your money.
And so that's exactly true. So just think about this for a second. If you're holding USDC or USDT or some other payment stablecoin, and they've built into it the ability to blacklist your wallet, that would immediately freeze whatever assets you've got. They would be essentially confiscated and potentially permanently burned. So like if you've got, exposure to these stables, just think about that. It's good to know that. And there are alternatives. And I think in this piece of video content, Mike, we're going to learn about the alternatives.
Orders. This legal mandate forced a structural fracture in decentralized finance, splitting the entire ecosystem into two strictly incompatible architectural camps. These camps are defined by two software structures: highly upgradable proxy contracts built for regulatory compliance, and purely immutable bytecode built for censorship resistance.
Yeah.
These code-level decisions dictate how a protocol absorbs or transmits macroeconomic tail risk across the rest of the market. The definition and stability of a stablecoin are no longer determined by its collateral, but entirely by its contract-level control mechanisms. We can see the impact of compliant architecture in the transition from MakerDAO to Sky Protocol's USDS token. USDS utilizes the ERC-1967 upgradable proxy standard. This allows the core token logic to be swapped out through a governance vote, ensuring the code can be updated to meet new legal requirements. Unlike legacy DAI contracts, USDS code includes a native blacklist, giving administrators power to freeze balances network-wide. This enforces the Genius Act. Because decentralized transfers strip away identity metadata, off-ramps to banks trigger automated velocity locks. Resolving these requires direct issuer control over on-chain assets. But building this control into the code introduces a systemic threat to other protocols: treasury contamination. USDS is highly composable, serving as foundational collateral within automated market makers and lending protocols. If an administrative freeze hits a key liquidity pool, the locked USDS becomes immobile. This instantly drops the pool's value to zero, freezing unrelated assets.
We just saw that happen with Circle's USDC. We just saw that happen just a couple of days ago, where Circle froze a smart contract containing USDC. It was like $12 million on like a quasi privacy chain, EVM quasi privacy chain. I don't remember the name of the chain, but like, what the fuck, man? Because if you're just like, an average individual or like a retail user, and you've got $100,000 of that 12 million, in that protocol, and Circle just arbitrarily freezes it because it's privacy, and so that's not compliant with the Genius Act or something, and so they're just going to freeze your shit. Like, and what recourse do you have? None
Whatsoever.
You're fucked. So like, you need to be aware of this, not cool, man. Not cool.
By embedding traditional regulatory enforcement into the base code, The industry has created a programmatic weapon that can accidentally paralyze entire decentralized lending markets.
Yeah.
The counter-movement to this model prioritizes strict immutability, exemplified by Liquidity V2 and the Bold token.
Okay, so it's not Liquidity V2, it's Liquidity V2. And this is a really, really cool protocol. In fact, Mike, maybe we should take a look at Liquidity V2 tomorrow or at some point this week for sure.
Here, let me write
Bold
that down.
operates on final EVM bytecode. There are no administrative keys and no upgrade proxies, making the token effectively non-freezable. However, forcing immutability at the base layer shifts the risk elsewhere. Most users interact through secondary yield wrappers, which reintroduce the same oracle and governance risks the base protocol tried to avoid. Other developers look to synthetic designs, like Athena's USDE, which uses derivative strategies to maintain a dollar peg without the capital drag of over-collateralization. Athena maintains its peg through a delta-neutral basis trade. For every dollar of spot crypto held, it opens an equivalent short position on an exchange. If ETH's spot price drops, the short position's gain offsets the loss, keeping the net value at $1. This design faced a critical stress test during the market crash of October 2025, seeing massive liquidations. USDE briefly depegged to 68 cents on Binance.
Yeah, no, it wasn't a failure. It was an attack on Binance's margining system. And it looks like it was a deliberate attempt to try to kill Hyperliquid. And, Athena was just a collateral
And I'm
damage.
not saying there's a connection, but who was the two top perps dexes that were battling at the time,
Hyperliquid and Aster.
and who was backing Aster?
Binance is Aster. So
I'm just saying.
I rest my case. Case.
And Chewbacca is a Wookiee from.
If the glove does not fit, you must acquit.
That's right. That's right.
This wasn't a failure of collateral, but an acute failure in exchange infrastructure.
Yeah.
Saturated APIs prevented market makers from executing the necessary arbitrage. This gap triggered pro-cyclical liquidations that amplified the local price drop on the exchange. To reduce this exchange-specific risk, protocols use off-exchange settlement providers to keep collateral in independent vaults. But the $1.4 billion Bybit breach proved that this custody model merely transmutates the risk. While the base collateral was protected, the attack froze the exchange's clearing ledger. This left positions completely unhedged and unmanageable during extreme market volatility. Removing centralized control does not destroy risk. It transforms it into oracle dependencies and invisible clearing vulnerabilities. To measure how these different architectures transmit panic, we have to look past simple averages and analyze extreme market events. This is the quantile vector autoregression, or QVAR, model. It maps how stablecoin linkages change during panics by isolating the left tail of the data. While traditional models assume risk is uniform, QVAR shows that dynamics during extreme downturns are entirely different from normal market behavior.
And if anyone remembers what happened, I think it was in April of 2023, when Silicon Valley Bank, like the wokest bank in the world, blew up. And it's like, no duh, they blew up. They were talking about like woke politics rather than focusing on their mission as a bank. It's like, duh, go woke, go broke. And so what happened to USDC during the SVB blow up was Circle had like $3 billion in an account at SVB. Why they had it there, I have no idea, but they did. And there was speculation that they weren't going to get it back. And so that was going to mean that, the Circle stablecoin USDC would, be not backed by as much collateral. So USDC depegged by 15% and USDT to the downside, and USDT depegged to the upside by 6%. So you had USDT trading for $1.06 and USDC trading for 85 cents. So during periods of extreme stress or some type of exogenous shock, stables can depeg against one another.
When we apply this to fiat-backed stablecoins like USDC or USDT, the data reveals near-zero volatility spillovers across all market conditions. They act as stability anchors. Redemptions are handled off-chain by liquidating banking deposits and treasury bills, absorbing volatility before it impacts on-chain pricing. Algorithmic and crypto-collateralized stablecoins behave the opposite way, showing massive spikes in volatility spillovers during left-tail events. This is due to a pro-cyclical feedback loop. When collateral prices drop, liquidation engines trigger programmatically. To protect the stablecoin's debt, they dump volatile assets into decentralized markets, driving prices lower and triggering even more liquidations. Quantifying these spillovers reveals a stark requirement. These protocols act as risk amplifiers. They require capital buffers 2 to 3 times higher than fiat-backed models to maintain the same level of systemic safety. Under this lens, the size of the stablecoin is irrelevant. Small algorithmic designs exhibit the same high volatility spillover profiles as multi-billion-dollar crypto-collateralized assets. The stablecoin landscape is now defined by a forced trade-off between compliance and immutability. Compliant, fiat-backed stablecoins provide an anchor for the market, but they introduce an administrative centralization that can programmatically freeze decentralized protocols. Immutable designs protect against that centralization, but they maintain their internal stability by dumping systemic volatility into the rest of the market. Because these architectures function so differently under stress, regulating them under a single uniform framework like the Genius Act is structurally flawed. As the QVAR data proves, non-fiat stablecoins are derivative-like amplifiers that require capital buffers 2 to 3 times higher than standard models suggest. Macroeconomic stability in decentralized finance cannot be perfectly engineered. It is always a compromise between sacrificing the network's decentralization or weaponizing its tail risk.
Well, it's not just the tail risk that was weaponized. It's the fact that there's regulatory compliance of Circle and Tether. So what I want to do here now, Mike, is I want to take a look at that truly decentralized stablecoin, Bold. So it's on the Liquidity, not liquidity, Liquidity. So this is a protocol, Liquidity v2. That's the protocol. And then this is the stablecoin, I believe. Liquidity. Where's the Liquidity? Liquidity Bold. There it is. So I think that this is the stablecoin, fully decentralized, over-collateralized, backed only by ETH, wrap-staked ETH, and RETH. So yeah, let's take a look at this.
I don't know if I'm a fan of that,
but
I'll keep an open mind, though. I'll keep an open mind.
Just pretend it's backed by Arrow, Mike. Okay.
Oh,
that's all you gotta do.
No, I'm all in.
You're all in. Okay, great.
Hey.
So let's check this out then. Here's the Liquidity protocol. Now, okay, so borrow on your own terms. So this is an over-collateralized lending protocol. It's a collateralized debt protocol. And you deposit your ETH and mint the Bold stablecoin. Okay, so let's take a look at this thing. Stake Liquidity, that must be their governance token. Increase your exposure to ETH and staking yield with a single click. Multiply up to 11x. No way. Let's take a look at this. So increase your ETH staking exposure yield. Industry leading LTVs of 91% for ETH and 83% for LSTs. 11x exposure on ETH, one click multiply, control your risk. Okay, so does this mean that it'll allow me to lever up just by depositing an ETH LST? Let's take a look at this. Oh, that's right. There's all these front ends. Because it's a decentralized protocol, you can use it through all sorts of apps. So it says Liquidity does not run its own front end. To use the protocol, choose one of the independent front ends below. That's really cool, actually.
We
because
actually talked about that DeFi saver not long ago.
Yes, DeFi saver is cool. So basically, this means that if you're a developer, you can build Liquidity into your dApp if you want to. So check this out, liquidity.app. Let's check this one out. Okay, so basically, if I deposit my ETH or wrap staked ETH over here, and after I deposit that asset, then I can mint the Bold stablecoin against it. So let's see here, borrow, multiply, earn, stake. I want to go to probably borrow, right? Let's see. So, wow, Euler bold. So after you mint, then you can start earning yield on what you mint over on Euler or on Yearn or on a bunch of other protocols. I want to go to borrow. So borrow bold with ETH. So if I put up, 10 ETH collateral, and I want to, borrow or mint the bold stablecoin, these are the LTVs that I can use. So if I want to, mint $5,500 against this, they're saying that that's going to be an LTV of 27%. If I want to, use the other end of the spectrum and go, okay, I want to mint, $15,000 against it, that's a pretty high LTV. So I'd be going hard on that. And then here's the interest rate. So it allows you to set your interest rate, which is actually kind of interesting. We need to do a deep dive on this, Mike.
Yeah.
And then redemptions in a nutshell. Okay, so redemptions help maintain Bold's peg in a decentralized way. If a user is redeemed, their collateral and debt are reduced equally, resulting in no net loss. Okay, so we gotta learn more about this. And if I go to earn, oh, that's right, the stability pools. So the cool thing about this is these stability pools, when ETH dumps, these stability pools do like 500% for a couple of days. So like the ETH stability pool over here. So the deposit, I think the deposit is only bold, right? So you can only deposit the stable coin here. So if you deposit a stable coin into the stability pool, you're not going to earn much right now. This is more of a play on like some type of, panic. This is like, you put some cash here in the ETH stability pool on Liquidity in case ETH dumps. And if ETH dumps, then you can earn like, a couple of percentage points per day for a couple of days. You could do like 300 or 600% for like a couple of days. So basically, if you've got like, 10K in the stability pool in bold and ETH dumps and you're doing 600% for like a week, then, you basically do like, if we got 7 days and you're doing 600%, that's 2% per day. So you could do like, 10 or 15% on your stability pool deposit over the course of a week if ETH puts in a really, really big move to the downside, because all of the people who have collateralized their ETH are starting to get redeemed. And so the stability pool is going to, earn a bunch of yield off of that. So we got to dig into this a little bit more. You got this multiply function where it looks like, you can deposit like a ETH LST. Maybe you got some Lido wrap staked ETH. And let's see here. So liquidation price all the way down there. Wow. So, but what type of yield are you going to earn? Interest rate within. So if I want to go like that, aggressive. Okay. So how do I actually earn yield on this thing? Like, does it actually ever pay reasonable yield? Manual interest rate. There we go. Set interest rate. But is that what I'm going to earn? Oh man, so you see, I need to figure out how to use this thing. And then back to the dashboard. So this is a decentralized stablecoin, though. This bold product, which I think is pretty cool. Looks like you can stake your liquidity to get voting power, to vote on incentives. Whatever. What are the rewards?
About it being backed by ETH. I mean, I would love for there be a stable coin that was backed by Bitcoin.
Yeah, I think that you'd have to build a protocol like that natively, either on the layer one or on Lightning, or maybe on one of those others. Some of the guys that we've interviewed so far.
Could you do it on near because of those near intents and all that?
That's a great question, man. I've been thinking about that. I've been kind of rolling that around in my head a little bit, like how I can integrate those near intents in with maybe like the front end of a DApp. Like I want to build a wallet.
That would give you that sexy interoperability, that cross-chain interoperability for liquidity.
Exactly, man. And I've been thinking about launching a protocol at some point over the next couple of months, and I think that it needs to be a wallet and a protocol together to make it really, really easy to onboard people. Because if it's just the protocol, then you got to figure out how to use it. But if it's a wallet with the built-in protocol in there, then the onboarding process becomes a hell of a lot simpler.
Yeah.
So yeah, but so we are out of time, and I just want to run through the Node.pro really quick. So check it out. I'm signed in, and this is what it says.
Hey,
That's
David.
that's so cool. That's so cool. So if you find value in what we do here at the Node Network, please like, share, subscribe. A lot of value just in liking, sharing, and subscribing to our YouTube channel. If you hop on over here to the Node.pro, make sure that you check out the Intel library.
Honestly, it really does.
It really does.
It really does help. So, I mean,
Yeah.
we can't stress it enough. Just simply hitting that thumbs up, sharing, it really, really helps us.
Yeah, and make sure to head on over to the Intel library and take a look at the Intel bundles that we put together every day. Check out the newsletter. This is ready for people to start testing it out. This is twice daily briefs, market intel delivered to your inbox on the assets that you care about on your watch list. Our community in Discord, this is a place where we live. So if you want to join us there, it's no cost. If you want to join the premium live calls, they're Mondays, Wednesdays, and Fridays. It's $100 a month. Join that. The programming, 9 original shows. We're live 23 times a week. You can always catch our shows. If you want to support us by buying some merch, head on over to the store. I got a little bit more work to do on this, but so far so good. I'm gonna buy some hats today, Mike. And then we've definitely got over here private coaching. So if you're looking to build a DeFi skill set, I'd love to talk to you. Go ahead and spend 30 seconds, fill this out, and schedule a time to talk to me. And hey, the Node Network is the place to be. So that's what I got, Mike.
Awesome. Well, we appreciate you all out there. Again, like, share, subscribe. Right now, Jeff's pre-record for the blockchain report for a low cap deep dive. It should be going later on today. David will be doing the market wrap. And if you are interested in the no cost trial of the live calls, with the advanced community, then go ahead and go to the node.pro and sign up for those and join us later today. Mondays, Wednesdays, and Fridays is when we do those calls. So if other than that, thank you all. And until next time, Veteran Crypto out.
Peace.